You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome to the Infinite Banking Mastery Podcast. Thank you so much for being here. I do appreciate you. Today, I wanted to talk about the additional riders that can be added to a policy, to a whole life policy specifically with some of these riders. Some of them can be added to also term, and some of them can be added to different types of policies. But for sure, these can be added to whole life policies, at least with the companies that I work with. So first of all, and I know I've mentioned this one before, there is a waiver of premium rider, might be called different things at different companies. But what it essentially does, it will allow you to stop paying your premium if you were to become too sick or too hurt to work. So something happens to you and you're unable to go to work, you got hurt, injured in a car accident or something. And people often think about, oh, nothing's going to happen to me. I don't need disability waiver premium or anything like that because I'm so careful or I drive really well or whatever it is. I'm not accident prone. But it also includes illness, disease, cancer, things that would cause you to be too sick to work. If you were unable to work because of sickness or being injured, and a doctor would say so, they would allow you to stop paying your premium, and that your policy, though, would continue. It would not lapse. It would continue. You would still have access to it. And so it's a very good thing because oftentimes when someone gets too sick or hurt to work, they end up dropping things like their life insurance because they don't have that extra cash to fund their policy and end up dropping it. And that's just another reason. For this side note, I think that it's great for you to have disability coverage, long-term disability coverage for that reason, because you never know what could happen in your life to cause you to be unable to work. And now you need money and you don't have any or don't have enough and you don't want to lose your house, your car, you still want to eat, you have health insurance to pay for still, which is probably more expensive. So just as a side note, disability insurance in general by itself as a standalone policy is great to have, something I have much of myself. A second rider that you could add to a life insurance policy is an accidental death rider. Sometimes it's called accidental death and dismemberment. Really, all that it means is that you died by accident. So you can add on this extra coverage if something happens where you end up dying by accident. I often don't use this rider because, if you die, you die. I don't need to add on extra funds for dying by accident. It's just an extra cost. And I believe that the death benefit that comes with the policy is sufficient. Another rider that can be added, guaranteed insurability. I don't use this rider or add it very often to my clients' policies, but it can be great. And certainly the younger you are, the better, because you're only able to use it around till age 40, at least with my primary company. It can be different with different companies, but for the primary company that I work with, adding the guaranteed insurability rider would allow you the opportunity to purchase additional coverage up to 7 times throughout your life, starting at age 22. So good for young people, maybe your kids, if you're starting a policy on them. As an example, you can add an amount up to $50,000. It would be a new contract for that person up to age 40. So if something happens, you have a policy on your child, but you want them to have the opportunity to continue to increase their overall coverage regardless of their health, since nobody ever knows what's going to happen to their health. It's nice to have that guarantee that you can increase your coverage if you want to throughout your life. So it's a great rider for that. Some of the ages, as an example, with this company, you can increase your coverage and add another $50,000 ages 22, 25, 28, 31, 34, 37, and 40. You just are given an opportunity at those ages to tack on another life insurance policy, regardless of if you've had cancer or some other thing has happened to you that would cause you to be uninsurable. So I do like that rider. We don't add it very often, but it certainly can be added. And if something that a person wants to be able to have that extra opportunity. It's an extra cost, of course, but it's just something that you can add to have that peace of mind as you age or as your child ages for you to be able to add coverage regardless of your health. There is also a children's insurance rider, which can be added to your whole life policy up to $25,000 a child. So you can have up to 6 children can have this coverage with the one rider. You would just add it to your policy and you would be able to cover up to 6 children for that one extra fee. And each child would be covered at $25,000 each up until their age 25. Once they turn 25, there is another cool thing that happens. You are able to then convert or transfer that coverage to their name into a policy that has 5 times that death benefit amount for them to start their own whole life policy. They would be able to get a contract up to a starting death benefit of $125,000 and then just begin funding that contract so that they can have their own whole life contract building cash that they can access as an IBC policy to be able to bank with, to be able to run their funds through to finance purchases for their future. It's an awesome thing to have if you're not starting a policy individually for each of your children. Then I'd say it's a good idea, if you can, to add the child's rider, because then you give them that opportunity to convert that later and start their own policy on themselves with no health underwriting. I certainly have stories and know friends who have had children who they did cover or didn't cover in their childhood, and those children ended up becoming uninsurable due to unforeseen illness or disease, and they were never able to get another insurance policy again. So it was pretty great, those that were able to get that coverage early, and you just never know what's going to happen. But in any event, if you have a child rider on your policy, then they have that opportunity for their future. I do have a lot of clients who will say, oh no, I don't want to add a children's insurance rider because that I feel like I'm dooming my child to a tragedy. Like now it means that something's going to happen to them and I don't want to think about them dying. And of course, we don't want to think about that. But instead, think of the opportunity that you would be giving your child by allowing them to start a banking policy on themselves at their age 25 and with no health underwriting. So it's just kind of an added gift. And if they ended up starting one sooner, or you end up starting one sooner than age 25, then certainly that rider can be dropped. And so you can drop that rider at any time as well. And of course, even though we don't ever want to have to think about a tragedy, our children dying, something happening to them when they're so young, it's just the worst thought ever. Of course, things happen in life. And, even though we don't want to think about it, if something does and you have a child rider on your policy, at least during that time of tragedy, you won't have to wonder where you're going to come up with the funds to have a funeral for your child. It's such a terrible thought, of course. So at least we don't have to focus on that. I mean, it's there for protection, but we don't have to focus on that side of it when we're talking about the child rider. Instead, we can focus on the benefit, the opportunity for their lifetime to be able to save into this vehicle that they will be able to access funds tax-free for the rest of their lives to be able to use for all sorts of things. First, a down payment on their home, or, they're buying cars, their own children's education, their retirement eventually. So we can focus on the benefits instead of the sadness and tragedy of something happening to our child. There is a lot of opportunity in that child rider being able for them to be able to convert it at age 25. That's very awesome. Another rider, which I've spoken a lot about, is the rider that provides chronic, critical, and terminal illness protection. So if you were to have a critical illness, which they actually do list out the illnesses that would qualify for that, something like a major heart attack or stage 4 cancer, you would be able to access up to 25% of the death benefit to help pay for that critical illness. And then there's also the chronic illness rider, which functions just like a long-term care rider. It allows you access to up to 50% of your death benefit if you were to be unable to perform 2 activities of daily living out of the 6. So there are 6 activities of daily living, and they are bathing, dressing, toileting, transferring, continence, and eating. So if you were to be unable to perform 2 out of those 6, or you had a major cognitive impairment like dementia or Alzheimer's, you would be able to trigger that rider inside of your policy and be able to access up to 50% of the death benefit. Now, this is also different for different companies. Some companies don't have it. Some companies have a slightly different calculation for how you access that death benefit, but it is an awesome rider, something you should look for to have on your whole life policy. And the third part of that rider is that there is a terminal illness rider, which sometimes, if you don't qualify for this threesome together, the critical, chronic, and terminal, sometimes you only qualify for the terminal illness by itself. And so the terminal illness rider will generally give you access to up to 75% of your death benefit. Sometimes it's up to 90, but that would mean that a doctor is telling you, well, you have less than a year to live. Sometimes it's 2 years, but you have less than 12 months to live. Then you would have access to a portion of that death benefit during that year to help pay for medical expenses or maybe to go on an amazing trip. But that's what that's there for. And it does have to have a doctor who state that you're terminally ill. But even if you end up getting better and you live past that, you still would have had access to those funds. And so those are really extra riders that can be added. Those are the main ones. There may be additional ones with different companies. These are the ones that I'm aware of with the companies that I work with, that I see all the time. So of course, it would just depend on your situation and what makes sense for you and your family. If there's something that you really want to have, we can take a look how it affects pricing and all of that, and what kind of benefits that you would like to see in your policy. As always, if you would like my help to better understand if infinite banking would work well for you and your family or loved one, I'd be happy to talk with you. I really enjoy conversations and teaching the clients, and so I would love to chat with you. You can reach me at Valerie@alphaomegawealth.com. I would love to chat with you to find out if we can. So again, please reach out if you would like my help in figuring out what would work best for you and how a contract could work for you. I hope you have a super great week. Take care.
This is the podcastfactory.com.